The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the September 12th. Fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Now, I hope everybody out there had a terrific Thursday, and it is Fantastic Friday. You know what that means? That means that you and I, that we must have an extraordinary weekend out here. So let's make sure that we do all that we can. In fact, one of the ways that we can have a fantastic weekend is for me to provide you with a fantastic thought. And that thought is this. I want you to always remember that each of us, you and I, each of us is born with a special talent. And you and I will find our greatest happiness in life in using it. Something to think about. Hey, for the next hour, I'll use my talents to share with you extraordinary tools for helping identify where prices headed to inside these markets that we trade, whatever time frame it is that you're looking at. We'll utilize that lightning bolt pattern, that A to B equals CD pattern. We'll look at Fibonacci expansions and contractions. We'll take a look at Japanese candlestick charting out there. We'll take a look at TAS, professional market profiles, Chapman waves, you name it. We'll use it in order to be able to use that as a cool tool to allow us to understand where price is headed, when things are maybe turning. So we'll take a look at that. And this is an interactive show. There may be some tools that you're looking at that you'd like to share with our listener audience. We'd love to hear from you. Our call number is 877-927-6648. Just give me a call, and we can take a look at your chart, your tool, whatever it might be. This is Fantastic Friday. It's Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the futures market relatively flat out here. NASDAQ off about 3 points. S&P down 1.5. The Dow off 11 points. Russell 2000 flat. King dollar back about 6 pennies right now. Silver down a penny. Gold off 360. Light sweet crude up a quarter. I guess there's nothing much to talk about. Nah, just kidding you out here. There's plenty to talk about. In fact, let's go focusing on the commodities. Let's take a look at Goldilocks first out here. We got volume behind this move here this morning, maybe down $3. But when we take a look at volume, you've already got 160,000 contracts trading. Now, what do we know about Goldilocks here this morning? Maybe we're going to see a nice big flush out today on a Friday. Big volume, big wide move to the downside. That is a possibility. Why is that a possibility? Well, you're trading now below the June 3rd swing point. That low, 1240.20. We closed below 1240.20. I show a volume of about 91,000 contracts on that day. We're doing 160, as I said today. We did 140,000 contracts yesterday. So you're breaking a swing point with volume. As you know, that sets up an A to B equals CD to the downside. Now, that A to B equals CD to the downside, that's a doozy out here. Because now, in order to create that pattern, what we're looking at is we're using the high out here from March 17th. That's your A point. Your B point's that little doji low back on June the 3rd. Your C point is up here on the trading session of July 10th. 1-to-1, uno to uno, 160,000 contracts already. Yesterday, 140,000 contracts as we took out the B point of an A to B equals CD to the downside. That was the June 3rd area. We take a look at what that price projection is, just the 1-to-1 A to B equals CD. Give me a moment here. We'll put that on the screen for you. That 1-to-1 takes you to 1194, but oftentimes gold likes to do an extension of that move. So now we'd be looking at the price level. Oh, man, what problems am I having? Can't give you that price level. Not sure why that is. Here, let me just put it to you like this. Here's what I was also saying. What I want you to pay attention to if you're watching this on the chart out here is you can see that 14-period relative strength indicator. This rubber band is stretching. We're down at 25.78. Can we get lower? Sure. The last time that there was a significant low put in inside of gold, we saw that relative strength indicator get down to 22.57. And then we saw a nice big piercing candle out here. Let me pull this off to the side out here. This is the lows we're talking about are June in 2013. It was not a key reversal session, just a piercing candle out there, but we put in a low, and that's what we want. That's what we really want to see out here. We want to see a little bit of a flush out, and that, quite frankly, that could take place today. I'm not even going to stick to the mere fact that what we need to see is the A to B equals CD to the downside. We're breaking a swing point. We're breaking with volume. What we want to do now is we want to watch for some type of reversal signal. And we want to be able to catch that reversal signal pretty quickly out there, because that's when the largest moves are going to be made out here. So gold is, in essence, unless you're long the metal and you're long the miners right here, gold is really, in my opinion, giving us an opportunity. That opportunity has not presented itself. Where has an opportunity presented itself? When we take a look at the commodity sector out here, right here, Texas. What's that black gold Texas tea? Yeah, it's in the Texas tea complex out here. If you take a look at light sweet crude, yeah, I've got the continuous contract up on my screen here right now, but it doesn't matter whether you're looking at this, you're looking at the October contract, you're going to the same thing. And what is it that we're going to see here yesterday? We're going to see a bullish engulfing and a key reversal session. We're seeing that as price was making a lower low, doing it with less relative strength out there. Now, if you take a look at light sweet crude and we take a look at the A to B equals CD down patterns out here, the A point we'll start with back on June 20th, 2014. Our B point's going to be July 15th. C point, not much of a retracement onto July 21st out here. What we also done is a 1 to 1.618 A to B equals CD to the downside. As you know, when you get to 1 to 1.618 level out there, oftentimes that's where the market is going to do something different. What we need to see today is we need to see some follow through to the upside. But boy, if there has not been a signal out here with regard to a potential trade out here, if you are in the, and now all this is really coming as we're seeing the U.S. dollar index start to get towards a high out here. So gold, no, we haven't seen any kind of reversal signal. Light sweet crude, a whole different story out here. And it's on, obviously, if we had a key reversal session on the daily chart, we have it on the intraday charts as well. And speaking of intraday charts out here, let me see. If we take the 120-minute time frame chart for light sweet crude, what we can see out here, interestingly enough, if you take a look at the Chapman wave, I know Basil's going to be teaching a whole bunch of folks here this morning. As it was making this low out here at 8 o'clock in the morning, this was yesterday, September 11th, got to two of those potential trough reversal areas, a G and a D out there as it was making that low. Bullish engulfing candle, got above market profile resistance out here, and that took place at 12 noon. We very well could be seeing an A to B equals CD to the upside right now, setting up in light sweet crude out here. That would be, well, let me do this here. I would say we'd use the low of this current session here. Now, maybe we get a bit more of a retracement for it to set up the C point of an A to B equals CD. But what I can say to you is that on the intraday chart, we're seeing a change in trend. We absolutely saw that on the daily chart. And what you need to see today is you need to see some follow through to the upside. But it is there in light sweet crude. So we'll see how that plays out. If we go take a look at silver, silver's got its own troubles as well. Maybe we're going to see some type of nice flush out today. Silver down with volume, already 59,000 contracts. It is trading just below its swing point from all the way back in May 30th, 2014. That low was out at $18.62 out here. You're at $18.58 right now. It's not the price that's so much the problem. It's the mere fact that we're down through that area with volume. And if we pull this back even further, I think we saw the lows out here. What silver's likely going to do, what we'd like to see it actually do, is get down to that low from June 28, 2013. That price point is at the 18.18 level out there. So we'll be paying attention to that. But you can also see silver. If you go back to, we really got that same kind of a pattern that is setting up. It may not set up today, may not set up on Sunday night, may not set up on Monday morning, but it's coming soon, folks, and it is coming to a theater near you, and it's the kind of theater that you want to be in the front seat when that happens out here, and because you want to be able to catch that move relatively early. That's where it offers the greatest opportunities out here. So that's what's going on inside of those three commodities. I think that's probably the biggest, most important areas for us to really touch on today. So have a great weekend out there, and I'll see you on Monday. Oh, I'm just kidding you. Just kidding you out there. I don't know if I even cracked anybody. Got a smile. Let's go take a look at what's going on. So if we take a look, how about our general market out here? What do we got going on inside our market? Let's go take a look at our currency pairs out here. If we take a look at a couple of them, how about your friend and mine, the Euro Japanese yen? Now, this bodes well for the bulls, not so good for the bears. What we are seeing take place right now is we saw yesterday Euro Japanese yen, so the day is not over. We'll see how things trade. But yesterday, price broke right into the top of that descending price channel. And what do we have taking place right now today? Today, you see a breakout of that area. So a pullback into that range to test it and then break out above that, that would be bullish. And were there any bullish signs yesterday in the market? Oh, my goodness. We've got more hammer candles to take a look at. We would need hours in order to go take a look at all the hammer candles that were formed out here. Of course, if we take a look at the Dow itself formed a hammer candle yesterday. Enough of a decline. 16,983.88. Write that down on your pad of paper. We'll talk about that when we get back from this breakout here. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. TigerTV.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pizzavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now we're taking a look at the Dow Jones Industrial. If you're watching us on the on Tiger TV, thanks so much for doing that. If you're listening on the radio, your mobile device at tfnn.mobi, don't forget you can always, number one, watch this show streaming live to you by going to the homepage of tfnn.com. Up in the upper right-hand side, you'll see a box with some smartphones on it. The show will stream live to you. You can get the archive of this show on Channel 9, and that way you're able to, you're able to see our charts in TFNN HD out there. And what we're looking at is yesterday's candle. Yesterday's candle configuration is very important for a number of reasons. Number one, it's the type of one-day reversal signal out here. It's the strongest bullish reversal, one of the strongest. Gap up, island bottom reversal. That's typically not a one-day session. That takes 3 candles. In fact, it's not a one-day session. What the heck am I talking about? But the hammer candle is. Now, yesterday put in a hammer candle low. I mentioned the low yesterday. You want to write this down on your pad of paper. 16,988. You know the expression, if you've listened to the show for a while here, you know that if you see it close below a hammer candle, if you're long, you're wrong. Without there being any kind of a floor having been built up coming off of the August 8th low out there, what that really sets up is sure a retracement, but it would be a very bearish message. And a bearish message, too. So what we have here inside of the Dow, we've got a 3 drive to a top pattern. That first drive took place right out here on June 20th. Then you had a nice Fibonacci expansion, a 1.272 expansions or so on July 3rd. One last drive, that was on July 17th. One last expansion out there. One key reversal session inside of the Dow. So you've got this top out here. We have not taken that top out. That pattern is still in play. Of course, that pattern went ahead and made the had the market move down to where its last swing point inside of the Dow, back to the May 20th level. Now, this is very important here. This is very bullish. If you're a bull out here, it's a beautiful thing. You want to see this. What you don't want to see is a close below that hammer candle. Now, the previous hammer candle that we saw inside of the Dow, that took place on June 26th. That's in essence what led to that third drive to a top pattern out there. Was that the reason behind it? No, but that was a bullish move. You never saw a close below that hammer candle out there. Not until we got into this big downdraft session from July 31st. If we take the Dow back a little bit further and just look for other hammer candles out here, what we are going to find is there was a nice hammer candle that was formed back here in April the 19th. What do we see? A little bit of follow through that very next session and a move higher into the May 22nd time frame inside of the Dow. We come back a little bit further. We look for additional hammer candles inside of the Dow. Well, we're going to see one that took place out here towards the highs on March 29th, 2012. If you take a look at this configuration, could be considered something similar to what we're looking at right now inside of the market. Of course, once we saw a close below that, that was a signal that the market was very weak out here. We saw the market move lower, went up, made a triple top, and then gave it up on price out there. If we go take a look at another hammer candle back here. Now we're into the September 2011 time frame out here. We're back to the August 3rd, 2011 time frame out there. That August 3rd time frame, we saw a complete failure that very next trading session. So these hammer candles are very important. If we take a look at the ES Mini, let's just pull up the current contract out here. Give me a moment to do that. We're going to see another hammer candle that was formed yesterday. Now, that's really the beauty of the markets that we're trading out here. You want to be able to see signals that identify something of significance when it comes to bulls and bears out here. So if we take a look at yesterday's candle inside of the ES Mini, it was a hammer out there. That says the low of yesterday. And we're looking at the December contract. That says that low, 1977.25. That is a very key level of support. If that fails, if you're long, you're wrong. That is the message behind that move. Does that mean that it has to fail today? No, but it is a number to watch and to put onto your pad. You want to talk about other hammer candles that are out there. I mean, a slew of them. So many I haven't had a chance to actually go back and take a look at it. But, your choice. We could go take a look at, hey, we were looking at Schlumberger yesterday or the day before. We were taking a look at that possible A to B equals C to E to the downside because Schlumberger has a big breakout session. And price had broken down below that area. Well, what did we get out here inside Schlumberger on September the 10th? A big hammer candle out here. That says inside Schlumberger. The low out there of 102.75 is very important. But what we do know is we know that we had a nice wide price spread accelerated volume day on June 25th, and it looked like the Bears had vacated, or the Bulls had vacated that position out here. Well, the hammer candle suggests, hey, not so fast. That was on Schlumberger. They're all over the place out here. How about Freeport McMoran, FCX? I believe that formed a hammer candle. Let's take a quick peek on that. You can see here's the hammer candle back on August 15th, where we saw a break below it. The same thing here on August 28th. Will this current hammer candle hold? I don't know, but we're going to go find out. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 25 points, straight out at 17,023. Composite down 5 at 45.86. S&P off 3 points at 19.94. Russell 2000 down 13 cents as we speak. Leading the charge to the upside. Ulta Salon Cosmetics up 19% this morning. Nice move there, up 18 bucks and change. Conversant, CNBR is the ticker symbol. That's up 30% out here. Maybe some kind of buyout. Let me see here. Buyout of Convert. Yeah, there's a buyout out there, so that's what's behind that. You've got Alliance Data Systems, ADS up 3%, up 7 bucks. XPO Logistics up $4.84, up 14%. Netflix up a couple bucks out here. You've got Eastman Kodak up $1.66. I'm looking at an Eastman Kodak, Eastman Chemical. What am I talking about? Eastman Kodak. Then they, I think they went BK, if I am not mistaken. You've got to the upside, Weibo Corp up $1. That's up 4%. Sportsman Warehouse Holdings, SPWH, up 15%. To the downside, Healthcare REIT down 3% off $1.94. You've got Continental Resources, CLR, off $1.29. CBS Corp down $1. Anheuser-Busch, this bud is for you. Down $1 right now. EOG Resources off $1. Schlumberger down 95 cents. Hey, we might get to find out if Schlumberger is headed for the hills to the downside if it breaks that hammer candle that we had mentioned. I think we looked at it during that first segment out here. Or maybe the second segment. National Oil Well, Varco, NOV off 1% this morning as well. All right, so we took a look at the commodities. Took a look at some hammer candles. Let's go take a look at some stocks here that are popping and dropping, get a feel for where they're headed to. We looked at the euro, Japanese yen. We'll go take a look at a couple other currency pairs as well. Man, take a look at this move here inside of Ulta Salon out here. Talk about being off the races. Now, this thing here has gone from the highs to the lows, back to the highs out here. It's running right into a area which could be a significant resistance area. Let me go ahead and put this back. Let me go ahead and take a few things off of the chart out here. Make it a little bit easier for you to see. Let's get rid of that, and let's get rid of that. There we go. Okay, so if we take, and let's get rid of that too. There we go, because we can always add it back. Now, if we take a look at Ulta Beauty Salon, take a look at this huge island reversal top that it had formed out here. How about this? I'm looking at the trading session. September 13th is when it had gapped up. The sign of strength behind that move was about 4.4 million shares. And it traded higher to sideways all the way up until December the 5th, 2013, and then gapped down with huge volume, 13 million shares. That's what it's trading into right now. So it stranded a ton of people on that private island that they were kind of saying, hey, not too cool. They really didn't want to be stranded up there. And today, they're now getting their opportunity to get some of their capital back. So that could be a very significant area of resistance. That area being the 117.88. Ulta Salon has not hit that. Got good volume behind the move so far, 1.6 million shares. Remember the downdraft that it's going against here. And watch this throughout the day is about 13 million shares. 13.9 million shares out there. So that's what's going on in the ticker symbol ULTA. Did it have any indication of some that it wanted to maybe move higher? It most certainly did, or at least consolidate. Well, if you take a look at, it showed a sign of strength coming off of the bottom back here on March 14th, 2013. and March 14, 2014 as well. That was your first sign of strength. We had another sign of strength out here in this on June 11, 2014, and today one more. But we'll see if these folks that are stranded on that island, if they just simply want to go ahead and get their money back, and they're saying, hey, I'm counting my lucky stars. Let's take a look at what else. Percentage-wise, moving to the upside, XPO Logistics. Make sure that's not a buyout. Does not look like that is a buyout out here. So if we take a look at this equity, it's off to the races. Got some decent volume behind it. Now, this stock chart looks pretty darn good. Let's pull this back. Yeah, so it looks like this is at 52-week high, if not all-time high out here. Yeah, looks more like an all-time high. This has had several signs of, couple of signs of strength here as of recent. The last one took place out here as the equity gapped up on July 30th, 2014, had 4 million shares behind that move. Let's take a look at the different A to B equals CD patterns that are present on this equity out here. I'm going to switch over to a weekly chart so we can see what we can see. Of course, if I'm going to do that, I need to turn the tools back on. So I've got to do that first, so give me a moment to do that. If I take a look at the A to B equals CD pattern on this, that's what's really occurring this week as it's taken out a B point, which was March 3rd, 2014, 6 million shares. This week here, you're up and over, wide-ranging bar, accelerated volume, already 8 million shares out there. You'd have to say that if we take a conservative A to B equals CD out here, we'll just come back to the swing from October 8, 2012. That's going to be our A point. It's going to try to be our A point. And the B point and C point. Looks like I've got a little problem with the, come on, work for me, baby. There we go. There's your A point. Your B point, that's going to be that swing here from March the 3rd, 2014. And the C point was our retracement down into May 12th. 1-to-1 A to B equals CD to the upside. It says 44.19. I'd have to say more likely 49.97. And that is on XPO Logistics. Let's take a look at what else we have moving here percentage-wise to the upside. Got Auto Home. That's up about 4%, 2%. VNET, that's up 11% out here. Stay away from that. This is nothing more than this thing. I thought this thing had a wide price spread to the downside. Let me shift over to the. Let me shift over to the daily chart out here. Yeah, so this just working up an oversold condition out here. So don't get in on this equity for sure. This had huge volume 2 days ago, September the 10th, 36 million shares to the downside. Followed up yesterday with 25 more million shares to the downside. That is via net out here. Now let's come back. We've got the Dow's trading off 44 points as we speak right now. This is the beauty of these hammer candles. Let me switch back over and let's take a look at the Dow and see where. I don't recall the price out here, so let's go take a look at the Dow Jones Industrials so that we can, so we're going to be able to, we may get a test of that hammer. Maybe that hammer candle holds, but folks, it's a beautiful thing because, I mean, there are hammer candles all over the place, and those are significant bullish reversal signs, and today, should we see it close below that hammer candle inside of the Dow Jones out here, you're looking at, again, that price point of 16,983.88. We're not down there yet. You're only at 17,000. And it's going to be, requirement is going to be, it's going to be a close below. Testing it and holding, then the hammer candle still becomes valid out here. So today is perhaps one of the most important trading sessions for the Dow. Now, if it doesn't get tested today, then today's not as important as Sunday or Monday, I should say. So we've got the Dow to pay attention to. We've got the ES Mini to pay attention to as well. Let's go take a look at the ES Mini. Now, inside the ES Mini, here's the 120-minute time frame chart out here. 120-minute time frame chart shows that beautiful descending price channel that we took a look at yesterday. And that price channel, we saw price yesterday move up and test it as well as it did here earlier this morning. Yesterday was really the test as price got up to the 1990.75 level. That has acted as a resistance area. Where is it that we're likely to see the ES Mini move down to? Well, 1978 becomes your market profile low. If you're wondering why we bounced yesterday, was it yesterday? No, it was September 11th. Yeah, that was yesterday. Thank you. Price bounced right into, in essence, the bottom of that descending price channel. We had, no matter how you count them, either a seventh or a sixth wave down, and a Chapman wave followed up by a bullish sign as price closed above this Rhodes momentum indicator signal that was from the 8 o'clock session out there, and then we saw a move all the way back up to the top of the descending price channel. That's a key level for us to be watching, is whether or not price can actually break out to the upside in this. Otherwise, what you're looking for is you want to switch back over to the daily chart. And the daily chart today, the key level again to be watching for inside of the ES mini out here is going to be the low of that hammer candle. Low of that hammer candle, by the way, of yesterday's trading session is 1977.25. You want to write that one down on a pad of paper. You see it close below that, you're going to get signals all over the place of what should be the bulls that gave us signs that the bulls really was the bulls are not there, that the bears are just simply able to overrun them. That is what's going on. That's what you want to be paying attention to inside of the market. As far as gold right now, not much movement there, but we know we got some volume to the upside, so just wait for that perhaps to explode to the downside out here. Let's go take a look at some stocks that are actually moving to the downside. We've got the sale. We got LinkedIn. Let's go check in on LinkedIn. LNKD is the ticker symbol. Let's get a feel for what LinkedIn is doing. LinkedIn has made the 1 to 2 A to B equals CD to the upside. That was coming in off of a hammer candle, by the way, from May the 7th. From that was your A point. Your B point was this little doji on July 3rd. Not much of a retracement, about a 55% retracement. That was into the July 10th, 2014 level. Makes a nice move, huge move. Makes a 1 to 2 A to B equals CD to the upside. When you do that, you typically go ahead and change course. As it was making that's most recent high, was doing it with less relative strength out there. Gave you a key reversal session. That was right here on September the 9th. So a key reversal and a bearish engulfing. That says that the top of that candle session, 232.28, is a significant level of resistance. We saw a little bit of a move up and a test of that on September 10th. And then yesterday, September 11th, you got a bear separating candle out here. So you got the bears. They're just hanging out in that 231 level. Where is it that price is likely to head back to? Well, it should make at least a retracement or head back to the sign of strength out here. That's what I would be targeting. That sign of strength is August the 1st. The low of that session, 192.56. That ought to be support. That's support level number 1. Support level number 2 is going to be the high of the prior session, July 31st. That's at 186.95 out there. If it's coming back with volume of more than 5.3, more than 10.5 million shares out there, LinkedIn will have some problems. Otherwise, it's just coming back to an area where it broke out. You would be looking to buy that breakout if, in fact, market conditions suggest that the market is also moving to the upside out here. That's what's going on inside of LinkedIn. If we take a look at Google's up a couple of bucks, that's not so bad. Let's take a look at a couple things that are moving out here. Let's take a look at healthcare. This healthcare REIT, HCN, is the ticker symbol. Well, it looks like they're going to issue more stock, 15.5 million shares, and that is what's made that thing a drop to the downside. Let's not spend any time. Let's go take a look at Schlumberger. Speaking of hammer candles out here, that formed 2 trading sessions ago inside of Schlumberger. What we know about Schlumberger is this. It passed a B point with volume. That was a trading session from August 15th. That had 5.3 million shares. That was passed with 7 million shares. So you've got a confirmed A to B equals CD to the downside. Now what you're waiting for is one additional confirmation. That confirmation, well, that's going to be the low here from September the 10th. That's at 102.75. You're trading at 103.21 as we speak right now. Let's look at what else do we have. Anything else of significance? Seadrill Limited, SDRL. That's down about 3.5% out here. Let's go see what this thing is doing, see if there's any volume inside this. Yeah, it trades a couple million shares out here. So let's just go see if we can find where the volume. Well, this thing is breaking swing points down here. So this is, let's put this on a weekly chart because this could be a huge A to B equals CD to the downside on a weekly chart. Give me a moment here to let this populate. Okay, so we take a look. Ticker symbol here is SDRL. Right now what it's doing, it's taking out the swing point low from April 14, 2014. That swing point has got volume of 17.9 million shares so far this week. Oh, 31 million shares. Yeah, it's got a confirmed A to B equals CD to the downside. Before we go fill in the blanks out here, is there any other sign of strength that could hold this in place here? Let's go take a look at the A to B equals CD. Let's go see if we have anything lining up. So the price projection on Seadrill, as we speak right now, unless there's some kind of big turnaround here today, should take it down to 1-to-1, should take it down to about 24.74. 24.74 is going to take, which would be logical. That'll take you right into your October 3rd, 2011 swing point, 21 million shares. So if it can move down there on light volume, test that swing point, that may be the extent of it. Otherwise, what we're likely to see is a move down to the 1996 to the 1781 area, June of 2010. Here is most certainly a stock that is weaker than the market out there. All right, so we took a look at the Euro Japanese yen on the move top side. Let's go take a look at just the Japanese yen, the U.S. dollar out here. Let's go take a look at its price patterns out here. And this is the weekly chart. So the weekly chart getting above a swing point out here. So this could be the next weekly A to B equals CD to the upside for this currency pair. This thing is off to the races big time. That A point on a weekly basis that you would use would be the low out here from June let's use the small one. June the 10th. That's going to be your A point. Your B point is going to be this little doji out here on December 30th, and then a retracement down into the low on February 3rd. 1-to-1, A to B equals CD on a weekly chart. It says 112.40 for the Japanese yen out there. That will continue to put a little bit of strength inside of the U.S. dollar. The only thing that could weaken that, that would be the euro. But the euro here moving a little bit lower as we speak right now. We get back to this break. We'll go check in on the euro and anything else you'd like. You just got to give me a holler. 877-927-6648. This is Steve Rhodes. This is TFNN. Dow is off 47. S&P's down 6.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 48. S&P is down about 6 points right now. Before we went to break, we were taking a look at the euro, which is just taking a break here. It's just working off an oversold condition. Been working sideways here the last several days. No real reversal signals, at least at this stage here. That suggests that the euro may want to make its way down to a significant area of support. That's in the 1.2751 level. If we, in fact, see the euro move down there and hold, that's likely where we also start to see the U.S. dollar index begin its reversal out here. So at this stage of the game, no reversal signal inside of the euro. Quick peek in on the Great British Pound as well. Great British Pound gave us some signals out here a couple of days ago. It had a key reversal session after getting whacked to the downside out here. Well, no, it wasn't a key reversal session. My apology. It was a Morningstar reversal pattern. We saw a little bit of follow through yesterday. As I mentioned, I think that you're best to just sit on the sidelines with regard to this currency pair, other than some quick trading out there because of what is going on over in Scotland. Nonetheless, so we are beginning to see the signs of a bottom out here. That's what traders are signaling to us. Now, these key reversal sessions that come at stretched areas, hammer candles and so forth, they're really important. It's how the market communicates to you and I each and every trading session. Now, each and every trading session, does it give us a reversal signal? No, of course not. But it's a way that the market does give us information, and so you want to be paying attention to those areas. The Dow, the ES Mini, as an example, I think are two key areas. We talked about a couple days ago or yesterday, the other hammers that were out there. We looked at the energy sector, the XLE. So that's that's the number 4 weighting, I believe, 4 or 5 weighting. Its hammer candle was tested yesterday. The hammer candle I'm referring to is September the 10th. 10 million shares were tested yesterday with 12 million shares, so it was really pushing lower with volume out here. You see it closed below 93.81. The energy sector is going to move down to 91.76, 89.95 as the next target range out here, so that's one sector. The XLY, consumer discretionary, that has a hammer candle. That has not been tested. Does it need to be tested? No, but September 10th, you want to watch that low of 68.07. Volume there, 2.8 million shares in the marketplace. If you take a look at the XLB, the material sector out here, it has an important low, 49.61. That is the hammer candle. And at least 24 or more stocks just over the last couple of days out here that are going to be important to be watching. Now, with regard, I mentioned light sweet crude as a key reversal day. If I go back to that here real quickly on light sweet crude, what you want to see is follow through. That is really the key to any kind of reversal candle out here. Why? Well, picture this. We're coming up to, what is my favorite weekends now. We now really start to get into the college game day, college football games out there. And imagine having recovered your punt at about the 5-yard line, haven't been pushed back. Well, that's really what took place here in Light Sweet Crude. And what you see is on first down, you make a decent play, but maybe you get decent play. Maybe you're now you're second and 3. And you want to see him get out of that end zone, right? And so you want to see some follow through, and that's really the same concept behind a key reversal session out there. If you don't get follow through, now you're down to maybe third and the same, so you need to at least see follow through on that next day. Otherwise, what? Otherwise, you might get a punt blocked in your own end zone or something along those lines. So, folks, just stay tuned today. We got the Nadex Bull Bear Binary Option Hour coming up next with our man Tom O'Brien and Daryl Martin. Then, of course, we've got the Basil Chapman Show. I'm not sure who's doing Basil's Hour today. And, of course, Nico and Paige. We've got Daryl Martin back with you. David White, Tom O'Brien Show from 3 to 5. Have a fantastic weekend out there, folks. I look forward to seeing you bright and early Monday morning.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.